Hello, my name is Jonathan Torres, and today I'll be talking about Alibaba Group, a conglomerate that is headquartered in Hangzhou, China. Its ADR is traded in the New York Stock Exchange. In this presentation, I'll be going about what is comprised of the Alibaba Group of its companies. I'll also be talking about in brevity the history of the company. I'll be giving out some stockholders information that interests those. Furthermore, I'll be doing a quick comparison with Alibaba's competition. I'll be going over really quickly the foreign exchange risk that this company pertains. Furthermore, I'll be going over recent details of Alibaba in the news, and I'll give my verdict of whether this stock is a buy or not, and therefore that would conclude my presentation. Alibaba Group, in the total sense of the word, is an e-business. All its focus is on online operations. Many of their popular sites are Alibaba.com, which is a business-to-business site in which companies can sell to other companies their quantity of stocks, pallets, large quantities so that they can export or import. Taobao.com is basically the Chinese version of Amazon.com. Tmall.com is a bit more interesting because it's basically an online mall in which brands and retailers sell directly to the consumers. So it's basically almost like an online Tanger outlets, if you guys know what that is. The other companies that Alibaba has are Alibaba Cloud, which is their infrastructure for cloud computing, which is still emerging to this day. The other system is Alipay, which is almost a competitive Chinese version of PayPal, which it basically has shut off PayPal into emerging in China. And the other major companies that Alibaba Group has are AliExpress.com, which is basically their Taobao.com for America and other international companies, in which you can basically buy simple products like from Amazon.com, but from Chinese retailers in the United States. They recently acquired Paytm.com, which basically is the Indian version of Alibaba, and the other site is Yuhaosuan.com, which basically is for flash deals. It would be compared to Amazon's.com, Woot.com, which it sells inventory that's basically left behind, or they just want to get rid of it through flash sales. Alibaba started from Jack Ma's vision, who is the founder of Alibaba, who was an English teacher turned entrepreneur when he was first introduced to the internet in 1995, when he went to Seattle as a translator for a trade delegation, and a friend showed him the internet. In his exploration, he and his friend searched for the word beer on the internet and discovered that there was no information about Chinese beers. This enlightened Ma, and he decided to launch a website and register the name Chinese Pages, but the business was not successful because his partners did not let him drive the company. Nevertheless, in 1999, he clustered 18 people in his apartment and spoke to them about his new vision. Everyone pitched their money on the table, and he collected $60,000 to start the company that became known today as Alibaba. History of Alibaba shows that this company was not an instant success either. Since the company merged during the dot-com boom, there were layoffs at its decline. Alibaba's situation was as such that by the year 2002, there was only enough operating cash for the company to exist for 18 months. At its start, Alibaba had many free members utilizing Alibaba.com, and Alibaba did not know how they would make money contingent on capitalizing these members. Their idea arose when they developed a site for Chinese exporters to meet United States buyers online. This was what saved the company from entering extinction. Alibaba made only $1 in profits in 2002. However, by the end of 2004, Alibaba made $1 million a day in profit. In the subsequent years, Alibaba improved in profitability to the position where it was launched on the stock market, and it had reached a merger with Yahoo China. As of April 19th, Alibaba was trading in the New York Stock Exchange for around $111. This is, however, to keep in mind that as of the week of March 20th, it surpassed its weekly high of $109. However, financial analysts are predicting that this stock will continue to rise, besides the fact that it already passed its yearly high. However, this company does hold the record for being the largest IPO ever in U.S. history, which occurred on September 18 when the company raised $25 billion dollars when it unleashed its IPO price at $68. This company does not pay dividends. Besides the fact that it does reinvest its capital, it's also for political reasons, which I'll further explain down below. This company has 2.5 billion shares outstanding. The PE ratio, based on Value Line's estimate, is to be at around 30 times for the years 2019 to 2020. The beta that Value Line gave was a 1.05. Based on the research conducted on the e-commerce industry, I have and others have concluded that Amazon and eBay are Alibaba's closest competitors. They're not, however, pure competitors based on the fact that Alibaba is completely online based, while Amazon has offline features like its delivery service extensions, and eBay is an auction site, more of an e-commerce where it's B2B or B2C, as they would say. There's not enough data to compare these competitors with Alibaba because Alibaba does not have significant growth charts based on the fact that it's only 2.5 years old on being publicly traded. But as of April 19th, Amazon was trading $823 its share, which has 475 million shares outstanding. Amazon, based on Value Line's figures, has a beta of 1.15. eBay was trading on April 19th at $31.83 with over 1 billion shares outstanding. eBay, based on Value Line's figures, could not give me any beta, but based on Google Finance, I was able to get a beta 1.29. However, this beta I would not use as a significant comparison to Alibaba and eBay because it's using different features that I was not able to estimate its true beta using Value Line's figures. Operating in China is not easy, as the slide says. It's because Alibaba, that does most of its operations in China, is always on the verge of being controlled by the Chinese government and based on their law on the foreign investment law. The unfortunate part of this law is that it almost nationalizes what is Alibaba, and nationalization of a company means that the people of China now own Alibaba, which would cause many conflicts, not only to the stakeholders, but to those that are trying to invest into the company. Based on the foreign investment law, in which China could enact on any moment, the Alibaba would be restricted to any foreign transactions, which would include raising capital and paying their loans. And if this is the case, they would also be subject to international law, which in U.S. it would be the Securities Exchange Commission, because by law all ADRs and publicly traded companies are supposed to comply with the SEC rules. But if China doesn't allow them to comply, then they will be subject to have their stock be shut down, basically. And furthermore, since China also controls other companies, Alibaba is also deals with the risks that its consumers on their companies might also face the risk that they may not be able to trade anymore, which would really hurt those that are trying to buy from Alibaba, for instance, or those that are trying to sell from Alibaba. Therefore, the risk is something that would always cloud Alibaba now and until the near future. Even though I said that political risk is a far more risk than foreign exchange risk, foreign exchange risk still needs to be looked at nonetheless. Based on my research, Alibaba has reported on its annual report as well that the renminbi, which is the yuan, and the dollar are the currencies of most concern for the company. There are ways of preventing this foreign exchange risk is hedging activities, but they haven't explained what other resources have they sought in order to prevent this situation. Is the risk under control? I believe so, but the situation, as they mentioned, is that they would be hurt by an appreciating dollar or a depreciating dollar, based on the fact that if the dollar appreciates, that means that they will have less international consumers to come in and buy the products that is sold through their portals. However, if the dollar appreciates, it will help them in raising capital, which in the near term Alibaba does not expect to do. But they always like having that idea in which investors could always come in and invest in their company. Using Alibaba's press release, I think it's important for me to capture and demonstrate the success that Alibaba has been having recently. Well, on March 22nd, Alibaba and the Malaysian government came together and they created what they call an e-fulfillment hub near their largest airport, which would create a digital free trade zone that would help Malaysia's imports and exports that result from the World Wide Web. Well, in essence, it's Alibaba that does this. Well, the idea behind this is that small businesses will get the opportunity to participate in this global trade. Another event that occurred to Alibaba was that they created a strategic partnership with Alibaba Group, which is similar to an offline Walmart. And what they agreed upon is that they're going to share information together, which really is to the integration of big data of physical stores, merchandise, logistics, and payment tools, with the ultimate aim of elevating its efficiency. On deciding whether this stock should be bought or not, based on my research through the annual report and financial analysts' views, it is a buy for this stock. The reason is Rob Sanderson from Barron's, a financial analyst, said that Ali Cloud has yet to expand, and that he believes that based on this segment of the company, that this stock could easily reach $130. Another analysts of Jiang and Long Lin have said that their internet finance and logistics side of the company has yet to evolve. It's undervalued, and based on this, it's that the company has entered the big data of China, similar to how Dun & Bradstreet have done this in the United States, and therefore they also predict that this stock can easily reach $130. Based on my view, I see that their best segment is actually their partner of SoftBank, which is an international Japanese telecommunications company. Both of them together have made partnerships in buying other smaller companies, and this is why I believe that the segment of, or which is really an extension of the company, is really another profitable side of the business. However, my suggestion would be to, if this stock is going to be bought, it's to hold it on to the long term, because this stock has already reached its yearly high as of March 20th that week. Therefore, if this stock is bought today, then there is an expectation that this stock might drop in price until it reaches back up to the $130 predicament. Furthermore, as an accountant, I believe that this stock is very sound, because everything they do is reported in US GAAP, and as an accountant, this is a plus, because the investment it is to translate these documents from China GAAP to US GAAP is pretty expensive. However, Alibaba has reverted to just simply doing US GAAP, so when they present their financial documents for China, they use US GAAP as their representative data, which in my case, I believe that this is a plus, because the expense in doing this not only would anger shareholders, it would also cost more work in translating these documents to their corrected version for the SEC. Thank you for watching my presentation. If there are any comments or inquiries that you have, please feel free to ask me or send me an email at the link that appears on the screen. Thank you.